Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for June 20th, 2013. Well, a continuation of the trend to the downside today in a candle that's made a lower high and a lower low, continuing that trend that was established 3 trading periods ago when the market closed in a bearish manner down below the 1380.7 level of support. Previous day to today's trading, the market took out important previous support around the 1353 level in a bearish manner, and we've seen very substantial follow through today. A very large black bodied candle, very strong sell off, where the sellers have closed with very strong control. They've been committed to taking this market lower for the entire trading day, and these buyers really aren't showing any strength at all in this market. The size of the body has increased substantially on the previous couple of bodies, and certainly it has been some time since we've seen a body of this size. It does suggest there is potential for the market to trade to lower levels, but the question is, has the market done too much too quickly? With this very solid downside momentum, have the sellers exhausted themselves? Will we see support coming in around the 1266 level? And there is a good possibility of that happening. So with the sellers strongly in control, however, it may not be some time until we see this trend technically change. We do have the potential resistance at the 1300 level, and that was potentially strong support to this market. It was going to be a very strong barrier to this market trading lower. If we look at today's trading, we've taken that out in a solidly bearish manner, and it does suggest that the strong sentiment in this market will see this market trade lower. So as I've mentioned, 1300 has potential to be a very strong area of resistance for this market now. Now, just moving back to that pattern that we saw in the recent past, and here we saw a wedge pattern, a type of wedge that moved against the prior trend. Here we have the prior trend moving down into the wedge. Here we have the wedge developing where the peaks and troughs within the congestion area are converging. We had the bearish breakout, the bearish close down below the bottom barrier. It gave us a target down around the 1300 level, and that target has been met today. So that has been a very good pattern to trade. It did occur down below the cloud, so it gave us a lot more confidence in the potential for it to meet its target by trading down below the cloud, and we have seen that happen. Now, in terms of the Fibonacci extension, we're examining the relationship of the first time frame downtrend to the previous time the market is trending down, and here today we're seeing the market take out the important 100% level in a bearish manner and take out the important 161.8% level in a bearish manner. It does suggest that there is good potential for the market to test down to the 261.8%, which is around the 1240 level, and that is a very strong and real possibility. In terms of the Fibonacci retracement, trading through the 161.8% and the 261.8% today in a very bearish manner, suggesting that the market could test to the 423.6% level. We are trading just around that area. It's rare for markets to trade substantially through these 423.6% levels. The next target is the 685.4%, down around 1189, and it's rare for us to see that occur. So I'd suggest that we could see the market finding support around this area, or testing down below there and then finding some buying coming in. It does raise some doubt about the potential for the market to continue substantially lower. It's not off the cards. The market could trade down to there, but it's rare, and there is potential for the market to have a bit of a rest. In terms of Ichimoku, well, obviously a bearish market in all 3 time frames. We're seeing the market now trading a fair way down below the cloud, suggesting that the market is strongly negative. Once again, we saw the bearish breakout some time ago. It was a very good Ichimoku sell signal, and we have maintenance of that. The market's also trading below the Kijun-sen and the Tenkan-sen, so we're bearish in the medium and fast term time frames, and the Chikou span is below the corresponding price action, so confirming the negativity that we're seeing in this market in all 3 time frames. If we look at the Kijun-sen and Tenkan-sen in the recent past, the market has been tracking those areas of the Ichimoku indicators very tightly, and has been holding that equilibrium in the medium and fast term time frame, and those indicators have been holding as an area of support and resistance for this market, and here we've seen it act as resistance in the recent past. And even for today's trading, both the Kijun-sen and the Tenkan-sen act as an area of resistance, and I dare say that if this market does rally, the Kijun-sen and Tenkan-sen will be very, very solid resistance. But this market will have even stronger resistance than that around the 1300 round number, and it will be a strong barrier to this market appreciating. For the sellers here, we do have very solid support down below. A lot of areas close by. We have 1266, 1250, 1237 and 1218, and then the round number 1200 will come into play. So very, very solid support down below where the market's trading that may see buying coming in. But I suggest that if we do see buying coming in, the market may have difficulty rallying through 1300.